And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet. And we're taking historic action to deliver on that promise, as you know, around the table. Yesterday, I signed an executive order officially creating our strategic Bitcoin reserve. And this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing.
Joe, I am a big proponent of the U.S. taking the worldwide lead in crypto. I think
something very strange happened with a post that the president made about cryptocurrency. That's like, if this happens, what else are you going to say? This could be exponentially explosive. Because
what if I told you Trump just made a move that could completely rewrite the U.S. financial system and nobody's even talking about it? Now, for the first time in history, the U.S. government is officially endorsing digital assets and stablecoins, and they're pushing banks to play a major role. Treasury Secretary Scott Bessent just said, quote, "We are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that." End
President Trump has fulfilled a campaign promise when it comes to cryptocurrency. He, as well as the current Secretary of the Treasury, has came out and said that they want the United States to be the global leader in all things digital assets. Now, because of this fact, and because President Trump has created the cryptocurrency reserve, which is a big move, now I got to ask this question. Does this move revamp the entire financial system to hedge against inflation, to bring the cost down and allow for the economy to thrive? Or will this move send us back into the dark ages and cause a market crash? This is going to be one of the most informative and fun-filled and interesting presentations that I'm ever going to do. Let's get this thing. You see that thing, baby? Let's get it and let's go.
We on now. They respect us cause we on now. Money up, run a whole town, don't we? This power money can't slow down. Money won't slow down.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Cliff, how you doing, big time? You doing all right, baby?
Yeah, man, doing good, man. Having a good week.
Yes, sir. I got to ask the question, did we get the bag this week, big dog?
Man, you see the logo right there. You know we got the bag.
We got the bag. Yes, sir, baby. It's been really good this week, man. There's been some challenges, but each week has its challenges, but it's how you pivot when the challenges actually come. But guys, this is going to be probably one of the most fun-filled, interesting real estate lives that you ever going to do. So if you could, guys, do us a favor. If you could, share, like, and subscribe, guys, because this here is probably going to not hurt your brain, but you're going to be like, what in the world is going on? But it's a good thing. It's a good thing. It's a good thing. And I can tell you this here, Cliff has not seen any of the videos that I'm about to show here.
Oh yeah,
he had to see.
He's gonna surprise me. He's gonna just show me on the screen as we go. We gonna figure this out. I'm looking at it like y'all looking at it.
Yes, sir. But it's in a space to where Cliff loves. All right, loves. So here's today's topics, guys. Here we go. Here's today's topics. Here we go. It's Trump's secret crypto plan. Ooh wee. And why is this crypto plan? Why is it happening now? And number 3, what is tokenization? You're like, what, Dale? You finna find out in a second. And number 4, the top Q&As for investors. In other words, what's going to be the best strategies with this new crypto strategy, man? This is going to be good. So, Cliff, you ready, big dog?
Yeah, let's do it.
All right, man. Cliff, man. President Trump's secret crypto plan, is this the ultimate inflation head. So let's bring it on, Cliff. Again, Cliff hadn't seen this at all. Let's see what's going on, Cliff, and see what President Trump has to say real fast. I want to see Cliff's reaction to this. We got President Trump in the middle. Here we go. Let's get it in.
And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet. And we're taking historic action to deliver on that promise, as you know, around the table. Yesterday, I signed an executive order officially creating our strategic Bitcoin reserve. And this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing, Scott.
Okay. As he's going, Cliff, what is your first thought process concerning what he's saying about a digital cryptocurrency reserve?
I mean, it could make sense. He's hedging his bets, so why not? You know what I mean? Crypto has survived this long, especially Bitcoin. So why not throw a little bit at it, see if it's smart.
Okay. Let's keep it going because he's gonna go a little deeper. Here we go.
The federal government is already among the largest holders of Bitcoin, as you know. Really one of the largest holders in the world, with as many as 200,000 Bitcoin obtained via civil law and various other forms of law, and including enforcement actions. These existing holdings will form the foundation of the new reserve. Unfortunately, in recent years, the U.S. government has foolishly sold tens of thousands of additional Bitcoin that were worth billions and billions of dollars had they not sold them, but they did sell them, mostly during the Biden administration. Not a good thing to have done. From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin. That's a little phrase that they have. I don't know if that's right or not. Who the hell?
Now, Cliff, why would he say never sell your Bitcoin?
Well, it's because the currency is going to keep expanding. Crypto is not. So Bitcoin, the whole idea behind crypto is that there's only going to be 21 million Bitcoin created, no
Okay.
more. That's
Okay.
it. So if you keep holding on to it and everything keeps inflating, the value of your Bitcoin is going to increase.
Okay. So the value is going to increase by
Mhm.
doing Bitcoin. Now, do you agree initially with this I guess it's this digital Federal Reserve crypto play that Trump is doing?
Yeah, I mean, it doesn't hurt. It's like especially for when they catch a lot of fraud,
Yeah.
people fraud, cheating, and they just kept the government will just get crypto because somebody went to jail, they get their crypto. And so why are we just selling it immediately
Mhm.
when you can create a fund and all that crypto you get, you just throw into the Federal Reserve or who I don't know who the Treasury is going to hold on to it.
Yeah.
Um, but yeah,
Yeah.
that makes sense. Why not? It's gone up. If they would have held, I think they had at one point they had like $10 million early on through some person doing racketeering or something.
Okay.
That would be worth billions today.
It would. It would. And actually, in the video that I'm not going to show, Scott Bessent, he's the current of I think he's the current Treasury Secretary. He talks about what you just talked about concerning we had a bunch of Bitcoin and we wound up selling it. We wound up selling it. He said at half of it. He said which was not wise at all. That's what Trump was talking about. He said don't sell it because he's talking about this. But now, watch this, Cliff. Now I'm gonna bring up another video for us, Cliff. All right, for you and I to sit down and talk about. Now, so you've responded right now concerning President Trump and his Federal Reserve situation, correct?
Mhm.
Got that. Now let's go into to the next thing. Okay, why is this happening now? Okay, why is it happening now? Now, Cliff, this is what you're going to realistically like because of the fact that you like to understand. Okay, what's the why? I want to know what's really going on. Why is he doing this for? Well, let's see what's going on here. All right, here we go. Let me go here. All right, let's go back here. Here we go, Cliff. Now, boom. Here we go. Now, here is Trump. I'm gonna do it like this so we can respond. I'm gonna put you on the big screen so we can see what's going on. Here we go. Let's get it in.
Trump just made a move that could completely rewrite the U.S. financial system, and nobody's even talking about it. Now, for the first time in history, the U.S. government is officially endorsing digital assets and stablecoins, and they're pushing banks to play a major role. Treasury Secretary Scott Bessent just said, quote, "We are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that," end quote. But here's where it gets really interesting. They have two ways to do this. One of them is a complete government-controlled system, but the other, it could take us back to a financial model from over 200 years ago, where banks competed to issue their own money. A system that some call chaotic, but others say was one of the greatest golden ages of financial innovation. So the big question is, are we about to see the return of free banking? And if so, what does that mean for you? By the end of this video, you're going to be able to understand exactly what's happening, why the government is pushing this now, and how it could create one of the biggest wealth building opportunities of the decade. Now, real quick.
So, Cliff, based on what you hear about that, man, what's your first thoughts?
I mean, so basically, crypto. Let me start with this: stable coins, right? So you can go a lot of different ways. Let's start with the
Okay.
stable coins. So stable coins, if it had mass adoption, like 30% of the U.S.
Yeah.
was using it, you could, if they understood
Yeah.
stable coins, you would understand that it could completely disrupt
It
all of
could.
banking
It could.
easily, because basically it's just a digital version of your
Sure.
money, which is digital now, but the difference is you're working bank to bank. It's peer to
Sure.
peer. And the difference with tokenization is the money is literally
Yeah.
yours personally. You could hold it in a free
Mm-hmm.
wallet. Free. You could create your own wallet using chatbot
You could.
GPT and hold all your money. I don't need a bank to
Yeah.
store it.
You could.
I don't even need a bank to, if I need to send Dale, hey Dale, here's $100. I don't need a bank. I don't need to send a wire. I don't need none of that. I can use the crypto exchanges to just send it to
You
you.
could.
Boom.
Yeah, yes, you could.
So you don't need all those transactions, you don't need anymore. So when they say that the government is going to start getting involved, the only thing I can think of is that they would have to develop their own stable coin.
Oh.
That's the only that's the
Yep.
only thing.
There's another thing they're doing as well, Cliff. Now watch this. Let's keep going, Doc. You unplug it a little bit. You unplug it. Here we go. Let's get it in.
Administration is fast-tracking financial changes right now. Why this is happening, the real reason why the U.S. is actually trying to embrace crypto, the new banking era that could spark this new age of financial competition, and, like I said, what it means for us. All right, let's go. All right, so let's break this down. Why is the U.S. government suddenly pushing stablecoins? Why now? And more importantly, why is Trump leading the charge on all this? Well, this all became crystal clear just last week when the White House Digital Assets Summit met, and Trump's Treasury Secretary Scott Bessent made this huge announcement. He said, quote, "We are going to keep the U.S. the dominant reserve currency in the world, and we'll use stablecoins to do that," end quote. Now, if I just pause right there and think about that, I mean, this is huge. For years, the U.S. government's been either ignoring or actively fighting against cryptocurrencies, but now they're embracing them. They're embracing stablecoins. So why? Well, partly because they have no other choice. You see, the US dollar is under massive threat, like never before. Inflation's been spiraling out of control. Global trade is shifting away from the dollar. China's aggressively trying to bring other people into its own currency. We have the BRICS nations trying to set up their own currencies, and China's trying to set up their own stablecoin, the ECNY. And they want to do this to bypass U.S. financial sanctions. But while governments might want to get away from the U.S. dollar, in favor of their own currencies, the people around the world, well, they still want dollars. As a matter of fact, they want dollars really bad.
Yeah.
So Trump and Bessent, well, they want to get dollars to the people around the world, and they see stablecoins as a way to do this, to weaponize digital dollars, to make sure the dollar remains the world's default currency in the age of crypto. And here's the crazy part. 95% of all stablecoins today are already backed by the US dollar. But currently,
Cliff, bruh, now, what do you think about that fact there?
Yeah. I mean, so man, you could go into. I already know all the ones that are like the stable coins. Like there's man, I could go. So let me just rattle off a couple, right? So the big one is
Yes.
Tether, and all Tether does is they have billions of dollars, and they just buy
Mhm.
treasuries. And so when you say you have a dollar, they basically say, hey, your dollar is literally backed by
Correct.
U.S. treasuries. That's all
Correct.
they're doing. There's billions of dollars. They went and bought treasuries, and they have it in a
Yeah.
vault. Cool. So if they had to liquidate, they'd sell all the treasuries and give you your money back. The other one, which is big, is Coinbase. Coinbase has basically that same type of model where they say, "Hey, we have cash on reserve." And in addition to that, they're willing to give you a
Mhm.
return. They pay like 4 or
Yeah.
5% per year just for you
Yeah.
holding the coin.
Yeah.
That's it. Same as the banks, right? The banks give you a little
Yeah.
bit of return. Now, there's other ones which are
Yes.
algorithmic stable
Yes.
coins, where it's just an algorithm that basically looks at the entire
Yeah.
market and says it buys and sells based on that market to
Yep.
stabilize it, right? But my question really is the fact that w- what's going to happen in terms of regulation with stable coins? Because me and you could start a bank today.
Mhm.
Why can't me and you open up a bank, open up a website, and say you could store your stable coins here? And who knows? We might have some incentives. Hey, if you put your stable coin with us, you can have access to our real
Correct.
estate, and you can tie into some of our
Correct.
cash flow in this if you store your money here. So how do they regulate
It's
that?
coming.
Because stablecoins opens the whole world.
It's coming. Now watch this. It's coming, Cliff. It's coming. I knew you had these questions. That's why I wanted your raw response. Here we go.
The problem is, at least for the U.S. banking cartel, the banksters, is that all these stablecoins, they're being issued by private companies like Tether and Circle, not by U.S. banks. And that's what Trump wants to change. Instead of relying on random offshore companies, the U.S. government wants American banks to start issuing their own stablecoins, ones that are fully backed, regulated, and integrated into the banking system. And here's where it gets even crazier. This isn't some far off proposal. Like, it's already happening, like right now. Trump's already started making huge moves behind the scenes to make this a reality. Congress is working on new laws for this. U.S. regulators are already flipping their stance on crypto. And the big banks, they're also preparing for what's coming because this regime change is happening faster than anyone's expected, all right? Hey, I want to just take a break from this video for a
Cliff.
second just to let you know.
So, Cliff, no, what do you think? What do you think about that reality all of a sudden?
I don't. To me, that seems it's too complicated. So if you're going to have each bank have their own crypto, that's going to be. I mean, think how many banks there are out there. So that's going to be very confusing that each one's going to have their own crypto. The only thing I can think of is what they really mean to say is that they're going to use the same
Mhm.
structure as Tether, but it's still going to operate like the legacy systems, like how it is today. Meaning, when you go to your bank account, let's say you got Bank of
Okay.
America, you see you got ten
Yeah.
thousand dollars in there. Cool, you got 10 racks. Right now, if I need to send Dale a wire, $100, I gotta go on, put in my information, type in his information. It's got to send it to the Swift system. It's got this multi-step type of
Yeah.
thing. But in the future, if it was just the whole system was
Yeah.
crypto, I can go to my system and Dale would just have a ID code. I would just put in his ID code, boom, he got it.
Yeah.
That's
Yeah.
it. Because they're all on the same crypto, right? They're all on the same. That's why Bitcoin works. Bitcoin is called a lightning
Yes.
network. So anybody on that lightning network, you can send money
Yes.
instantaneously. I'm guessing the banking system is going to have their own network to where now money is going to be
Okay.
instantaneous. I need to send Dale $100, bang.
The answer's coming. You're almost there. Here we go, Cliff. Here we go. The answers. This is good. I want your raw, and then we're gonna dive into the tokenization. Here we go.
Their own digital dollars isn't just an idea. Like I said, it's already been put into motion. On March 7th, 2025, the White House held its first ever Digital Asset Summit. And this brought together the top crypto leaders, banking executives, and members of Trump's cabinet. And during the live stream portion of the meeting, Trump Secretary Scott Bessent basically dropped it in plain English. He said, quote, "As President Trump has directed, we are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that," end quote. Now, that quote should tell you everything you need to know. The U.S. government is now actively embracing digital assets, U.S. dollar stablecoins, not to fight crypto, but to use as a weapon to maintain dollar dominance. Now, just days after the summit ended, then Trump signed an executive order launching what he calls a strategic Bitcoin reserve and a U.S. digital assets stockpile. Now, while that sounds flashy, the real action is actually buried in the details. Treasury Secretary Bessent made it clear this order directs agencies to rework banking and tax rules to favor stablecoins. So, one, the Treasury is going to amend and rescind all previous guidance that hinders digital asset markets. Number two, the Office of the Comptroller of the Currency shall create a framework for stablecoin integration into national banks. So that means two massive things. First, it tells us Trump isn't just talking. His team is rewriting the rules like literally in real time as we speak. Second, this all but confirms that banks are about to get the green light to start issuing their own stablecoins. Meanwhile, Congress is already working on the legal framework to make this official. In early 2025, lawmakers introduced two major bills. There was one called the Stable Act and another one called the Genius Act. Now, both of these bills designed to create a federal framework for stablecoins. So the Stable Act, which was in the House, it requires stablecoin issuers to maintain a one-to-one reserves in U.S. Treasuries or cash deposits. Number two, the Genius Act, through the Senate, it grants national banks and financial institutions the authority to issue and settle stablecoins under the OCC oversight. Now, here's the kicker. Trump isn't waiting around for these things, right? He's pushing Congress to get a stablecoin bill on his desk by August. Trump said himself, quote, "We want digital dollars issued by American banks, not foreign companies, and not radical bureaucrats. Congress needs to get this done," end quote. Now, to make this work, the administration needs federal agencies to stop fighting crypto and start working with it. And guess what? That's exactly what's happening. The OCC, the Office of the Comptroller of the Currency, just approved national banks to start issuing their own stablecoins. The IRS, of course the Internal Revenue Service, they ordered to start rolling back restrictive crypto tax rules to encourage adoption. Bessent even said the Treasury will rescind and amend all previous guidance that hurt the digital asset markets. So think about that. Just a few years ago, regulators were cracking down on crypto at every single opportunity. Now they're rescinding. Now they're rewriting the rules to make stablecoins and digital assets the foundation of the financial system. And this isn't just talk. Major banks are already preparing for what's coming. JP Morgan already launched JPM Coin. It's a tokenized dollar for institutional use. And guess what? It's backed one-to-one by cash reserves, just like the new stablecoin rules would require. Wells Fargo CEO just said they're exploring tokenized deposits, which, let's be honest, is just another way of saying stablecoins. And let's not forget Circle's USDC stablecoin, which is already being integrated into major payment networks, including Visa. So we can see it. It's happening. The banks know what's coming, and now they're all getting into position. And now this leads us to the biggest question. If banks are about to start issuing their own digital dollars, could we be witnessing the return of free banking? Because the last times banks had this much control over issuing money, it led to one of the most explosive periods of financial competition in U.S. history. We might be about to see it happen all over again. Now,
so Cliff, I know that was a long segment, but man, what are your thoughts concerning what he's presenting in this one?
I mean, I don't see a huge difference from where we are now. He's just talking about the network. That's it. Now, the thing that I'm trying to understand too is he's saying the stable coins and the financial system, but places like Circle are not financial institutions. That's a private institute. So they would have to file to become one. And then the next question becomes, so what happens to companies that are overseas? Do they not settle? And like if I have a stable coin that's like Tether, or I have something else like that, can I where's that exchange? Where's that off ramp from a JP Morgan coin to a Tether? Where is that exchange? Is that governed by the government? Is that governed by an exchange? Where is that off ramp going to if I want to do that? And if they're going to do that, I mean, that's really the only difference I see is settlements. It's gonna speed up settlements quick. So there's no more waiting days or weeks for like ACH will be a thing of the past. Like
Yeah,
waiting 3 days, that'll be
yeah,
gone. You'll be same day
yeah.
settlement, easy.
Now, to answer
You
your
know,
question concerning who's going to control this, because Tether and Circle are offshore private companies, correct? So
right?
how are they? What's going to happen here? Watch what happened, Cliff. Your question's going to be answered here in a couple of seconds, man. Here we go. Let's dive into this.
For those of you that aren't history buffs like I am, you might be asking, what am I talking about? Well, this whole idea of banks issuing their own money, their own currency, it's not new. The U.S. already tried this before during the free banking era from 1837 to 1863. Now, back then, any bank could issue its own currency. You didn't have to have U.S. dollars. You had hundreds of different banknotes circulating issued by different financial institutions. And here's the key part. Back then, banks had to compete.
Yeah.
If a bank issued weak money, people didn't trust it. If they issued strong money, their currency became widely accepted. And this forced banks to actually earn trust. They had to back their money with gold, silver, strong financial reserves, or people just wouldn't use it. They'd go to a competitor's bank instead.
Yeah.
And because of this competition, banking services and financial innovation skyrocketed. Now, if we fast forward that to today, guess what? We might be entering free banking 2.0. Except this time, it all happens on blockchains. Now imagine walking into a store and having the option to pay with a JPM coin or a Wells Fargo dollar or a Goldman Sachs stablecoin, just like in the 1800s. Now back then, banks would have had to compete for your trust. The ones offering the most stable, the most secure, the most widely accepted digital money would dominate the market. Scott Bessent said it. He said, quote, "The stablecoin framework will ensure financial institutions can offer dollar-backed digital assets in a regulated, secure manner." Now that means that banks could soon be competing to issue the best digital dollars, and this could change everything. So what happens if banks are allowed to compete again? Well, here's what it could mean for you. Better banking services, because banks would have to offer lower fees, higher interest, faster transactions, just to stay competitive. Stronger and more secure money, because stablecoins would have clear regulations, real asset backing, unlike offshore unregulated stablecoins we see today. Instant global payments. Your money could move anywhere in the world instantly without relying on antiquated SWIFT systems or outdated banking networks. More financial freedom. Instead of being forced into one monetary system, you'd have real choices over where to store your wealth. In short, this could be the biggest transformation in banking since the internet. And so now that we know what's happening, where does this lead us? Like, what's the big picture here? Well, the answer is simple. Like, this could be the biggest transformation of the U.S. financial system and of the U.S. dollar in history. And when everybody thinks the U.S. dollar is dying, it could be cementing its position as the dominant global leader for decades. Now, like I said, the dollar's dominance has been under attack from inflation, from global de-dollarization, from countries like China and Russia pushing their own currencies. But now with stablecoins officially backed by U.S. banks, the dollar could actually come out stronger than ever. Why would that even strengthen the U.S. dollar, you might ask? Well, more global demand for dollars. We have this situation where people all around the world with failing currencies, think Lebanon, Turkey, Argentina, Venezuela, Peru, they all want U.S. dollars, but they can't get them. And the government wants them to have U.S. dollars. And so U.S. stablecoins is a way to do that. Now, right now, over $200 billion in stablecoins are already circulating worldwide. Almost all of them are pegged to the U.S. dollar. And that number is expected to grow at least 10x, maybe even 100x as stablecoins go mainstream. And then banks start competing to offer the best digital dollars. Instead of a single outdated financial system, we could see banks competing for better, faster, and more services. Now, of course, anytime we have competition, we get better products, better services, better prices. And this isn't just about stablecoins. Banks are now able to hold digital assets, think Bitcoin. Now, imagine a future where sending money internationally happens instantly with near zero fees, all powered by U.S. bank-issued stablecoins. This could lock the U.S. dollar in as the global reserve currency for the next era of digital finance, ensuring the U.S. remains at the center of global trade, investment, and banking. But here's the thing. There's another option, one that doesn't require stablecoins, one that doesn't even require banks. You see, Trump and Bessent made it clear that they also support Bitcoin with the executive order and the strategic Bitcoin reserve. Now, there was talk of it being a crypto reserve, but they made it clear this is a Bitcoin reserve, not crypto. They said that Bitcoin is different and will be treated different than anything else. And the thing with Bitcoin is it allows us to be our own banks. So instead of relying on stablecoins and banks to control your money, Bitcoin lets you hold your wealth directly without any middlemen, without any restrictions. And with Bitcoin, we have true financial sovereignty. There's no need to trust a bank-issued stablecoin. You control your own money anywhere in the world. You can move it instantly across borders with or without government approval, and yes, without the bank. And most importantly, though, it's a hedge against inflation.
Yes, it is.
Unlike the dollar, Bitcoin has a fixed supply. There's only going to ever be 21 million Bitcoin. So instead of your money, your dollars, buying less and less goods and services in the future, Bitcoin buys you more goods and services in the future.
Yeah.
Let me give you an example. In 2016, the U.S. median home price in the U.S. was $288,400, and it was also 664 Bitcoin. Today, the U.S. median home is $434,700, but it's only 6 Bitcoin. Okay, just one more quick break. Hopefully you're enjoying the video. I just want to let
So, Cliff, concerning that, brother, what's your thought process on that presentation there?
Yeah, I mean, it's now he's wrong on one aspect. Not each bank is not gonna have their own crypto. It's not gonna be like their own type of stable coin. It's basically all the same stable coin. If you think about it, they're all backed a dollar to a dollar. So it's not gonna be like, well, J.P. Morgan's dollar is better than Wells Fargo's dollar. They're both a dollar. They're 1-to-1 to the U.S.
Sure.
Treasury. So it's gonna be a dollar no
Sure.
matter what. You're not gonna have J.P. Morgan's worth
Of
$1.50.
course, of course,
You know what I'm
of
saying?
course, of course, of course.
Right. So it's gonna be so it doesn't make a difference who you bank with. It's always gonna be a dollar. And I think you're gonna see seamless transactions because they're gonna be on the crypto on the network. It's gonna be instant, right? And so you're gonna see transaction costs come way down. Right. Now it's the interesting part is what you could do with digital money once you get into it and once you start understanding it, as you can see some new type of products
Yeah.
come. So for example, one issue that's easy to solve with this is let's say like right now everybody's got
Sure.
bills,
Sure.
right? You probably have water bill, electric bill, credit card bill, whatever it is, right? Now how do you pay for it all?
For
Probably use
sure.
a credit
Yeah,
card,
yeah.
right? Okay. So you probably use a credit card to go through
Yeah.
all of that to be
Yeah.
able to pay it. Now, instead of you using a credit card and having to log into each
Yeah.
account, each one of your accounts could have a QR
Yes.
code. And so when you subscribe, you get a QR code. You put all your different QR codes from all your different uh whoever your
Yeah.
bills are with, and you put that into one
Yeah.
system. You load it in there, and now it tracks
Mhm.
all of it instantaneously across all of it, all your subscriptions, all your
Yeah.
bills, everything, and it's gonna track it in real time and give you updates that's tied to your
Yeah.
banking. Now you can start doing that kind of stuff where you can start getting instantaneous
Sure.
updates, what's going on. It can give you, and then if that company wants to reward you, they can reward you through your QR
Correct.
code immediately. Hey, you've been with us 6 months. Here's your additional free month
Yeah.
free. Here's an update. They can put money directly into your account that way. So I can see that being huge. But the problem I see is, let's say let's try Bank of America, right? Cool, they got Bank of America coin. But Bitcoin is also by the U.S. government legal. The problem with Bitcoin is it's rogue. That's the problem. What I mean by rogue is it's not backed by any government. It's not backed by
Mhm.
anyone, and nobody owns it, and nobody can
Sure.
adjust it. Right. So where do you hold it?
Good question. This is my.
Is
Go ahead.
Bank of America going to give you a wallet and you're going to store it with Bank of America? So Bank of America is going to let you on their system compete with their own financial system on their own platform? I can't see them wanting to do that.
It depends on if the government forces them to do it.
Because then you could go to your wallet, you go into your Bank of America account, and you have your Bank of America, and then you have your
Yeah.
Bitcoin, and they're going to make that transferable where you
Correct.
can switch it to one to the other.
Correct. That's how they will compete for the business. And remember, he talked about Tether and Circle, right? So let's
Right.
walk through this. Trump does a Bitcoin reserve, let's say Federal Reserve for digital assets, Bitcoin. They came out, he signed a declaration for that. He's even having all the agencies amend their rules to make it more friendlier to digital assets, right? Because he understands that 95% of all of the Bitcoin cryptocurrency is backed by dollars. What did Biden do in the first portion of his term with Russia? What did he do? He sanctioned them.
Oh, yeah, he froze all their
Now, when
accounts.
that actually happened, what did that make the commodities market do? It turned into the Wild Wild West. How do we know?
Right. Yeah.
Well, Russia began to sell their oil to China directly, and China paid it with their currency. Well, the oil used to be used to be traded and sold in just dollars exclusively. Now, it's still the lion's share of it is dollars, but it made Germany was paying with theirs, I believe. Russia with theirs, China with theirs. People would actually Saudi Arabia with their own currency. They were doing that, so
Right.
it made it the Wild Wild West. So it weakened the dollar. Correct. Well, what Trump says, okay, I see what you're trying to do when it comes to the SWIFT, China. I see you had your own coin, China. I got you. Don't worry about it. We're going to go ahead and create a Bitcoin reserve, right? And what we're going to do is we understand that Tether and Circle are offshore private companies. That's great. We're going to basically remove them and bring the blockchain under the government itself. So we don't need you. We don't need an offshore company because in order for us to back this as a government, we have to have control of this. So yeah, you guys can use Tether and Circle. That's fine. As far as those other countries, that's fine. We're going to use our own, which is fine because what we're doing, and at the exact same time, this happens. 95% of all the cryptocurrency in the world is backed by the dollar. So therefore, we've recreated the petrodollar, but now it's just the digital petrodollar. Checkmate.
Man, it opens up a lot of. So here's the issue. So internationally, to me, it's like, okay, the U.S. government says they're going to back their own
Yes.
network. So why wouldn't Europe back their own network? I mean, you could stand up a crypto network pretty easy. There's a lot of different networks you could do it on. So they could stand up their
But
own. And then the question becomes, how do I transfer my money from U.S. to the euro
here's
dollar?
the problem with them setting up their own. 95% of cryptocurrency is already traded in dollars.
But so the first part is crypto. Crypto is talking about the technology, right? The second word is currency,
Sure.
which means it's not just one, it's multiple. That's what gives it its
Sure.
power, is that the power of cryptocurrency is the fact that it allows you to change
Yeah.
currencies instantaneously. Right now, if Dale, me and you, we headed to Europe. Let's go,
Yeah.
right? We need the euro. How do you get it?
You exchange it. You
What would you
exchange
do?
it.
Where do you go to get the
You
exchange?
go to the exchange place over at the airport, or when you get off the port of entry, of course.
Exactly. So you're telling me you can't take your Bank of America account and instantaneously say, I'm going to Europe, I want euros. With cryptocurrency, you can do that. It emails you to say, I have 10 racks in US. I want to instantaneously change this to euro. And all it does is go to the market, goes to an exchange, and exchange it for that current price. Then you could turn around and say, I want to exchange it for the Japanese yen. It'll instantaneously go purchase it. So the power of cryptocurrency is, even if the US government stood up on their own, what's going to end up happening is all these other countries are going to stand up on their own, and you're going to see people buying and selling currency changes. You're going to see the currency market fluctuate even more.
And I believe that's what they actually want, because of the fact that he's just recreated the petrodollar, but in the digital world. That's all he's done. To where he can say, okay, China, I know you created your own coin. Great, no problem. Good luck in getting that traded, because 95% of all the cryptocurrencies in the world are backed by done in dollars. Because if what you're saying is correct, why did it happen when it came to oil? Why did it take for Biden to sanction Russia for countries to begin to buy the oil in their own currencies. Why did they agree to do it with the dollar alone?
But you don't have to have the dollar.
Yep.
You can so
Mhm.
for example, there's a crypto called
Yeah.
DAI,
Mhm.
DAI, right? It's an algorithmic
Sure.
cryptocurrency. It doesn't need the
Mhm,
U.S.
mhm.
government. It algorithmically sees what's going on the tether, or if the U.S. had a
Yeah.
back system, it'll automatically take that, do the algorithm, and say this is what
Yeah.
it's worth. The rest of the world doesn't have to use the U.S. dollar. They can basically use a fake U.S. dollar that still shows 1 to 1 with the US dollar, and they'll just trade in that. They don't have to have
I
exactly the US
agree,
dollar or
but
you
now
see
it
what I'm
comes down to
saying?
trust, because if it took for Biden to sanction Russia for China to begin to trust in accepting the ruble for the yen or whatever theirs is called, and actually
Mhm.
had to happen. So I have to ask the question: if you're doing it now post sanctions, why did you do it before? There was a confidence in the dollar from countries and the masses. So Trump is saying, I'm saying bringing that same mentality into this thing. So Trump is saying, yo, it's the same thing. The line, 95% of all the cryptocurrencies are trading in dollars because they trust the dollar, because the
Right.
world wants
But okay,
dollars.
right. I'll give
Right?
you an example, right? I think it's uh, El Salvador, I
Yeah.
think that they're backed by crypto. They turned a bunch of it into the
Yeah.
Bitcoin. So let's say this. Let's say I'm living
Yeah.
overseas, right? Name a country. I'm in
Mhm, mhm,
Jamaica,
mhm.
right? I don't have access to the
Yeah.
American
Yeah. Yeah.
network, but I do have access to
Yes, you do.
Bitcoin. That's a global
Mhm.
currency. Okay, well, BTC, the Bitcoin, is measured against the
Sure.
dollar. So I basically have effect the same vision as that. So I'm holding BTC. Cool. I now have a world
Yeah.
currency, right? Now it's like, well, I don't have access to the US
Mhm.
markets, but I do have Tether. So what I can do is hold BTC as my wealth. And then when I need to transfer to go
Yeah.
spend money, I can instantaneously transfer it to
Yeah.
Tether, pay what I need to
Yeah.
pay. Now I'm operating in
Yeah.
dollars and instantaneously get it back. And you're like, well, Bitcoin's fluctuating. Fluctuating compared to
I
what? The
I
dollar.
I hear
You
what
see
you're
what I'm saying?
saying, but El Salvador, they did make their currency Bitcoin. Why did they not recently? Why did they actually remove that from their currency? Maybe,
Oh,
yeah.
I didn't
Oh,
know.
yeah.
I
Oh,
didn't hear
yeah.
about
Maybe
that.
because there was no confidence in that, because their citizens wanted the dollar, and Trump saw all that. So think about it. From Trump, I said, wait a minute. The world wants dollars. Got a lot of it. We have a printing problem when it comes to us printing a lot of money. I need a way for us to relieve release some inflationary pressure from an economic standpoint. Digital dollars, digital assets. 95% of the world is already doing this with the dollar already. I've just supercharged the petrodollar situation, but from a digital standpoint. Now I can even do it a little bit more. I can really force tether and circle to be removed. I don't got to say it. My actions would just say it. Tether and circle are probably shitting in Britain. They're like, oh, wait a minute. Now we're competing with the federal government. They're intertwining this within the banking system. That was never been done until now. And they're rewriting all economic policies and tax law to be
Yeah,
friendly to
that's it. And,
this.
yeah, it's going. Yeah, I think it's gonna have some downsides you don't see because now everything becomes trackable.
That
Every
was,
dollar on that network
yeah,
is
yes, it
trackable.
is.
So if it goes to somebody foreign, just like
Yeah,
and every piece of data you have is now trackable by the U.S. government. Whoever owns
yeah,
that network,
it is.
whoever owns that
You're
network.
right, and that's my one hesitancy. I'm like, now this graduates over to the digital dollar scenario, so they can actually monitor everything that you do.
Everything that you do, and they kind of started all this with like people don't know this. If you want to be an investor, right? You want to actually want to trade. So I trade stocks, I
Yep.
trade currencies. People don't know that your credit card information, your data is released by the
It
credit card
is.
companies. So you could see where the money's flowing, where it's going. Now it's delayed, so you don't get it real
Sure.
time. You see what happened 2-3
Sure.
months ago. But still, your data information is there. This is going to make it real time. And the problem is whoever has network access
Yeah.
and has real
Yeah.
time access to that information, competitive
Oh my
advantage.
God.
I mean,
Yeah.
you'll know today that this one thing is selling like crazy. You could get something stood up and start selling the same thing
Yep.
that day because it's the same as
Mhm.
Amazon. Amazon knows what's selling on its
Correct.
marketplace. If it sees something
Yep.
selling, it could just mirror it and boom, now it's an Amazon.
That's all it does. I agree with you. And that's why, guys, they know when you buy ammo. They know when you buy a artillery. They know it. They know it.
Yeah.
This whole dog and pony show when it comes to the politics, dog and pony. They know.
But it'll be like right now, only your credit card
Yep.
company knows.
That's it.
That's it. When you get to a network, whoever runs the network will know. So right now, the only person who knows the transactions today is Bank of America because you got
That's
that
it.
credit card, or American
That's it.
Express. When you get this network, they'll know. One person will know all transactions of every piece of money flowing in the entire
Correct.
country.
Correct. Now, Cliff, as we graduate over, you may say this is a great lesson in cryptocurrency and governments and money, which is great. And that was a lot of meat there for you guys to kind of gnaw on a little bit. And you may want to rewind the podcast again and listen to this again, guys, to understand the entire concept. Now, how does this actually shake hands with real estate? Well. So, Cliff, if we're talking about crypto, Bitcoin, that whole scenario there, and the digital assets reserves for Bitcoin as well, we got to figure out tokenization, because crypto being used in real estate is nothing. That's not new, is it? Not at all. So I'm going to allow for Cliff we're going to ask Cliff to unpack what tokenization is, but I'm going to show a video real quickly, and then we're going to talk about what strategy you should be using when this comes into play, because it's coming into play. It's coming. This is not going to be something, another surprise. It's coming, guys. So Cliff, let's dive in this real quick. It's a short video, and then you put your spin on it on what it is to make it a little bit easier for everybody. All right. This is what is tokenization. Let's get into this. Here we go.
The term tokenization in thought. What does that mean? Well, you've come to the right place. We're going to break down this complex business term in a way that's easy to understand. Well, simply put, tokenization is the process of substituting sensitive data with a non-sensitive value, referred to as a token. Imagine this. Let's say you pay for a monthly food box subscription online with your credit card. We will call the company ABC Foods as an example. Since you're being charged on a monthly basis, ABC Foods needs to store your credit card information in a safe way. This is where tokenization comes into play. Tokenization essentially protects your credit card data while it's stored in a business's system by replacing your credit card number with random values that others would not be able to read. Let's walk through two examples that will compare a payment system that is tokenized versus one that is not. Here's an example of a non-tokenized purchase. Let's say you purchased your food box online and they needed to save your credit card information. You go to their website and you place your order. Then before they send you your order, you save all of your credit card information into their system for future use so they can charge you again later on. Since their system is not tokenized, every digit in all of your actual credit card information is saved with the company for future use. Right. Well, where's the problem? Let's say someone hacks into ABC Foods' website and manages to download everyone's data that they saved when making purchases. In a non-tokenized purchase, these hackers now have everything they need to use your credit card to make purchases without your consent. Clearly, your data needs to be protected, and that's where tokenization comes in. Let's see how things would look if you purchased your subscription with ABC Foods and they used a tokenized system in this scenario. When you enter in your credit card information, every number gets randomized into a series of values. I'm sure you've seen this. This is what ABC Foods would see, as those X's represent the tokens that have replaced your card's information. So if there were a data breach and someone were to get credit card information from ABC Foods, they would see your credit card as a bunch of values that they could never read and use. That translation of your credit card information into tokens is what we call tokenization, and is what protects your data online. Well, hopefully that explanation helps you understand what tokenization is and how it can keep your information safe. If you have any more questions, feel free to ask us in the...
So, Cliff, did he give a good description of what tokenization truly is?
Nah, I
Oh,
don't think
really?
so.
Okay, break it down to us. What's tokenization?
Wait, what he's talking about is like a security against having your assets
Correct.
stolen, which you can do that with doing tokenization like that. But basically, all he's really talking about is it's just a transfer of how do I say this? Like, okay, think of it like this. What he's talking about is you got your credit card with
Mm-hmm.
Amazon, right? But if Amazon gets hacked, they got your credit card
Yep.
info. But what if your credit card company gave you what's called a dummy
Yep.
credit card? So you give them that dummy credit card, and that dummy credit card has a limit on
Okay.
there, right? It has all these different limits on there. So if someone even were to hack Amazon, they'll get a dummy credit card that has a
Mm-hmm.
artificial limit. It's not a real credit card, it's a false one with a, you know what I'm saying? So it's not really going to operate the same way. So that's kind of a different way of looking at it. I see what he's saying with his tokenization, which is instant transfer of electronic funds in order to kind of defer fraud, right? So that's one way to do it. Tokenization to me is more like a best way to put it is like shares of a stock. That's true
Okay.
tokenization. So when you go to, let's use Walmart as an example, you could buy shares of Walmart, right? It's selling for $25 a share. A share is a token.
Yep.
It's the same thing. Like it's just
Yep.
paper. It's just a digital version of what's supposed to be a share of a
Yep.
stock. Token is exactly the same thing, which is, now I just buy tokens of
Yes.
Walmart. Same thing. The token could be worth $10 today, $15 tomorrow, same as a stock. That's a better way to look at it. Is that right now, in order to create a stock, to create a share, I got to go through all these regulations. I have to go through a lot of things to say Walmart is worth what this paper says it is because it's backed by regulations and it's backed by all
Correct.
this stuff through the government. Tokens is like a poor man's version of that. Ain't no regulations, ain't nobody verifying. Tokens just get stood up immediately, and now you got shares of something. But what's it backed by? That's why you see a lot of
Yeah.
pump and dumps because people are basically creating false
Yeah.
companies, tokens or shares. Stock price goes up or token price goes up, but it's not backed. Walmart's not going to go to zero
Yeah.
tomorrow, most likely because it's backed by regulations. It's backed by the
Yeah.
government. Tokens can go to zero.
Let me ask this question then, Cliff, then, real quickly. How can tokenization actually work in real estate? Because this is nothing new at all real estate wise, but how can it work in real estate?
It's the same as buying, like I mentioned, like buying shares of a company. So what it does is it could bring what's most likely going to happen is because tokenization is so much easier than doing
Sure.
shares, is you'll probably end up having a second market, like a privatized
Okay.
market, and you'll have exchanges on those privatized markets that are going to be less
Sure.
rigorous than you will find for the stock
Sure.
market. Stock market, you're going to be worth $50 million, have so much
Yeah.
revenue, all this kind of stuff. The smaller version is probably going to end up happening where it's going to be smaller companies who say, we did
Yeah.
due diligence. We did our own due diligence. We looked at this company. We did all these things. And it's a, smaller version of a stock exchange that's probably going to be regulated by the government. And you're going to have all these. And now you're going to see what exchange do you want
Yeah.
to work with? So in real estate, what's going to end up happening is if we buy a apartment
Yeah.
complex, what you're going to do is you're going to buy 100
Yeah.
tokens of our apartment
Yeah.
complex. And when the revenue comes in, you'll see, let's say you have 100 tokens, it's $1,000. You'll see your token go from $1,000 to 1,100
Mm,
because we paid you the money through the
gotcha.
token. Then you have to take that token and convert it back to USD, US
Gotcha.
dollar. But the problem is, Dale, and I've noticed this too when I first started learning about crypto. If you know
Mhm.
crypto, if you start getting into crypto, you're damn near an
Yes, sir.
economist.
Yes, you are.
You gotta know exchange rates. You have to
Yes,
understand
you
banking.
do.
You have to understand financials,
Yes, you do.
exchanges. You gotta Like, and so the average person, to me, is not really going to hop on board with that. They're gonna keep banking the way
Because
they've
that's
been
all they
banking.
know.
They're not gonna see no
So
difference.
that's all they know. Yeah, it makes sense.
Exactly. The people who are in the know are going to be learning how the exchanges work, how you can actually create more value with tokenization and all that. Because it's you really do have to become an economist and understand
Ooh,
tokenizations, understand, why is the yen going up but the dollar staying? What about the networking that goes into it? The BTC,
you do. You
it's
do.
and not only that, the economy side of it, you have to understand the technology side of it, like for Bitcoin, people just running
Yeah,
servers, making money. How does that even work? How do you make money just running so it's a whole bunch
it's
to it
done.
that I think, still a long way away from the average person really
So it sounds
understanding
like
it.
what you're saying, as far as the top strategies for buyers, only look at this if you know how cryptocurrency operates. Same way with investors. Only get involved with cryptocurrency when it comes to tokenization if you understand the entire process, the systems, the laws, the leverage, the banking components behind it, the blockchain, everything. Make sure you understand what's going on, because a lot of the times people jump into something that's exciting, and I've been guilty of this too, and I know Cliff has as well also in the past, and we get our ass handed to us but it was exciting. So make sure you understand that you have some counsel, legal counsel, financial counsel, wealth management counsel, because cryptocurrency can be used as a very, 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 very useful tool if you know what you're doing. Cliff, you agree, man? You disagree?
Oh yeah, 100%. Yeah, you gotta know what you're doing, and I mean, fundamentally, crypto into itself doesn't is worthless.
Yes.
The technology it's basically it's a super powered accounting system.
Mhm.
Is really what it is. It's a great way to account where the money's going, how much it's worth. It does all that real time based within the
Yeah.
technology. It's still fundamentally going to come down to who's behind the
Yeah.
token, what's happening behind that
Yeah.
token. BTC is the reason why it's so
Yeah.
powerful is because there's no one
Not
behind
one
it
person.
and it has mass adoption.
Yes. Yes.
So that's its only value. So I still think you got to do your due diligence. Cryptos into themselves aren't worth anything. If you're trading, then you can find money just because of the way money moves. But beyond that, what I think you're going to see from what I can see, Dale, what you see from the mark, from what everything you show me today, the
Yeah.
exchanges are going to be where the money
Yes,
is made.
sir.
I think there's going to be an opportunity to stand up tokenization
Mm,
exchanges legally,
mm.
which are going to be many New York stock exchanges.
Yes. That is where the play is going to be, is that middleman. Right. It's the same thing now, guys. Look at Stripe. Look at
Mhm.
Cash App. Look at
Right,
Venmo. Look
right.
at all these people. Look at Uber. Uber is a taxi company and it owns no cars. It's a middleman.
Bro,
What's up?
you just maybe when you just said
Mhm.
Venmo, they'll Venmo will go away. Why would you need Venmo or Cash App
Why do
anymore? You
Why
won't
do you
need it.
think that they actually created Fed now? Created Fed now to get rid of Cash App and Venmo and Zelle.
Yeah,
Don't need it anymore.
because right, yeah, because if me and you, if we both on that same network and there's tokens with Bank of America and Wells Fargo,
Yeah.
shoot, I could just be like same as Cash App. I'm like, boom,
Correct.
what's your
Correct.
number? Do do do
Correct.
done.
It's
Yeah,
that
they're gonna go
simple.
away.
Guys, Cliff taught me a lot about cryptocurrency. I am not a crypto expert at all. I know he's forgotten more than I know, but this guy actually trades crypto. He knows the blockchain. He knows it, guys. He's an expert. I was doing pretty big transaction initiative in the Bitcoin. I leaned heavily on Cliff, heavily on that, because this is his space. Yes, we real estate investors. Yes, he's general contractor. Yes, we're bankers, which is fine. But we get thrown a lot of opportunities, don't we, Cliff? And we say yeah
Yeah.
or no. But we never do things that we don't understand. So what's the stop strategies for buyers and investors? Simple. Go with what you know. If you don't know, get wise counsel. If you want to do it, do something small and then graduate up. Don't go big from the get go. When someone was asking me, I went to a event last night. A good friend of mine was asking me, "Dale, I want to get an apartment complex in investing." And I said, "Yeah, that's cool. You can." He's like, "So, man, I'm told Liddell that I should invest in real estate, invest into apartment complexes. I was like, have you done this before? No. It's probably not wise to begin on an apartment level because you don't know what you don't know. I said,
Get a duplex.
duplex, drop something small, cut your teeth there, and then grow up to that scenario. Now, Cliff and I, we can go out and buy a 1 or 200 unit apartment complex, and look at the numbers. And actually, I have a couple of them that they got emailed to me today. Cliff, I got to send over to you. I sent one over to you already. You haven't clicked. This is in Brooklyn, New York. At the exact same time, guys, we've done so many transactions. We can look at a deal like that easily. Single family residences and apartment complexes are essentially the same type of deal. It's just the apartment complexes are bigger numbers, bigger details that you have to look at. It gives a greater rate of return, but the strategy is still the same thing. We buy below wholesale. Am I right, Cliff? We buy a deal. It didn't matter if we buy a single family residence, new construction, or apartment complex. The formula is still the same. We buy below wholesale. It's real simple. Am I right, Cliff?
Yeah.
That's how we operate.
Exactly. That's the key to everything. Yeah.
This is the reason why, guys, we actually give away our free ebook, Distressed Property Investing, because the strategy is the exact same. It's nothing different. It's the same whether we're buying single family, apartment complex, new construction. We're buying below wholesale. I mean, Cliff bought a property in Jackson for $15,000 or $20,000. Am I right? That's below. It was a 3-bedroom, 2-bathroom, 2-car garage. Am I right, Cliff?
Yep.
1,800 square feet.
Oh yeah.
We bought it, put 40 into it, worth 110, 115. And the whole subdivision has all of that. We're now mastering the property management source, a portion of this thing, because each property manager is different in each area, but the formula is still the same. You make money when you acquire, not when you sell. This is the reason why, guys, we're giving away our free ebook, Distressed Property Investing. It is completely free. We don't want no money from you at all. It's how you can locate, find, vet, and structure a deal the right way. And if the deal makes some sense, guys, Cliff and I will fund the deal for you. We can profit split. We all about getting the bag. Am I right, Cliff?
Oh yeah. Listen, yeah. We're gonna help you out.
It's simple. Scan on the QR code on the screen, right? Or you also see the word real estate here. DM me the word real estate, no matter what platform that you're on. Or in the show notes below, you can just click on the link below and go download the free ebook. It's free. And also, real quickly, guys, we also linked to the actual masterclass that we actually taught on this topic for free. These are the actual notes themselves. So you get a free ebook and a free masterclass. Free, don't want nothing from you. Nothing from you at all. Nothing from you at all. And also, guys, I got to say this here as I remove this here, right? You have a licensed appraiser on the screen. Licensed not only as single family residences, but also, Cliff, and commercial apartment appraiser. Am I right, Doc?
Yeah, just start doing commercial.
So, guys, for you to have somebody on the screen right now that can give you counsel on appraising, that is a game changer. Am I right, Cliff? Tell them about it, big dog.
Yeah, I mean, this is not too many people with that kind of experience. Man, I've been like, just to kind of think of it, just the combination, being able to been in thousands of homes, seen it all. And not only have I seen it all, I've done it. I've flipped properties. I've been on the other side of it, to where I'm not just telling you the value. I'm having the value mean something to me, right? Because I own the asset. So I got both sides of the coin on.
Real simple, guys. So again, not only can you go download the ebook, you can also reach out to Cliff on hunterappraiser.com. I'm going to put it back up there again, guys, for you to reach out to him. And if you have a deal that makes some sense, he'll counsel with it. Now, it's going to cost you. You're going to pay for his time. Don't get it twisted. And there's no free game here. The free thing is the ebook and the masterclass. That's free. But counsel on a specific deal that may be your deal outside of us at all, Cliff, and he'll tell you all about that. I make no money on that at all. That's all Cliff. call him. But for you to have someone that has a investor mentality, construction mentality, as well as a licensed appraiser, triple threat. Reach out to him. Real simple. Cliff, you want to say anything at all, man?
Just go to the website, man. It's got all the stuff on there. Just sign up, let me know, and I'll be able to help you out. So just go to the website.
Sounds good. But guys, that's all I have to say, man. Cliff, you want to say anything before we leave, big dog?
Man, you already know, man. You one deal away. Go hit up that ebook. Holla at me and Dale. Man, just take action.
Yes, sir, guys. Again, free ebook, go get it, guys. But you know how we get it before we leave every time. Before you leave, while you can't. You see that thing, baby. It's picture for your mom and them. Holla at your partner. See you guys next week, guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit. I had no money. So I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made that lion's share of my money.
Wow. Okay.
Actually running from the cows, I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy and hold a lot of properties. Now watch this. I actually buy a lot of properties. I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.